Hi, Brad Keller from ProWealth Advisors. I wanted to spend a few minutes with you just to go over the portfolio design theory behind ProWealth. When you land on our homepage, what you'll see is a button that says Build Your Own Portfolio. When you click that button, you'll be transported to a page that asks a series of questions. This is a risk tolerance to kind of get an idea of how you feel about the market and how you might feel about different things within the market. It helps us understand your mindset, and it helps us recommend a customized portfolio for you. At ProWealth, what we've done is we've thrown out the old Wall Street models. 100% of what you'll receive when you go online to either a robo-advisor or you go into a brick and mortar investment advisory house, brokerage house, or any of these other types of institutions that many of you have dealt with, is we're not going to build a portfolio that takes 20 to 30 years to bear fruit. That's modern portfolio theory. And you've heard it before time and time again from your investment advisors and the other financial minions that regurgitate the lies of Wall Street. Don't worry, Mr. and Mrs. Jones, just hang in there. It always comes back. You will have a positive return. You have to stay invested. Don't worry. That doesn't work. It hasn't worked. So at ProWealth, we take a different stance. We feel that when you engage us, you're hiring an advisor, and that advisor should be looking at what's happening not only in the economy today, but forward, looking at what we believe is going to be happening in the economy going forward. And we should adjust your portfolio and tweak your portfolio intuitively. And when we do adjust and tweak your portfolio, you shouldn't be charged for it. In addition to that, your portfolio fee should be so low that the dividends and interest, which is the case with ProWealth, by the way, more than covers any advisory fee and any internal portfolio expense. In fact, our portfolio costs and our advisory fees are so low that the dividend and interest in each and every one of our portfolios, including the most aggressive, more than covers the cost and leaves you still with dividend and interest in a positive manner. We are so confident that our process works. After being in this industry for 30 plus years, each and every one of us that's on our board of directors, we are so confident that this process works, we're willing to put our money where our mouth is. Unlike every other firm out there, for qualified investors, per the SEC guidelines, we have a no gain, no pain policy. You don't have a positive return in a quarter, you don't pay a fee. To learn more, visit us today at adviceforless.com. Go to the ProWealth Advisors homepage, click the Build Your Portfolio, and you will be transported to a customized portfolio. In future blogs and webcasts, I'll explain why you should never have an asset allocation that contains 5% or less of anything, because it does no good. We'll explain why right now emerging markets and international markets are not the place to be and haven't been for over a year to 2 years. Learn more by visiting the website daily, weekly. Go to the ProWealth blog. Sign up today. Go to adviceforless.com.